All right, welcome everyone to Stock Talk with Nico Kritikos. Today we're going to be going through the stock Datadog. And this is a software company that helps businesses analyze data, manage customers, and analyze the performance of cloud services. Datadog's stock is up 115% in the last year, and the market cap is now $60 billion. Their customers include companies like Samsung, Activision, Comcast, Whole Foods, and DraftKings. They also acquired Timber Technologies this year, which provided them with a process known as Vector. And this Vector program fits in perfect with what Datadog does. And so I see that as a positive for this company. Finally, if we're comparing this company to Splunk, which Splunk is a very similar company that does similar types of data processing, Datadog is more customizable. Their program installation is easier and cheaper, and their program alerts you whenever there is an issue, as well as it has real-time data visualization. After reviewing their Q3 2021 earnings call, I took down a couple notes, including that they now have 17,500 customers, which is up from 13,000 customers a year ago. They also have $1 billion of annual recurring revenue as of Q3. They have 31% of their customers using at least 4 products compared to only 20% last year. And in 2021, they are expecting revenue of $993 million, which would mean 64% year-over-year revenue growth. Next up, we have their financials. For income, we have Q3 2021 income of negative $5 million. This company has yet to make a profit. And if we look at the type of revenue they were doing in 2017, we could see that it was about $100 million. And 3 years later, in 2020, they're doing $603 million. As of this year, they're expected to put up $993 million of revenue. On their balance sheet, we can see that in 2017, they had negative $75 million worth of equity. And today they have $957 million of equity. So a huge jump up in the last 4 years. Their assets are $2.2 billion and their liabilities are $1.2 billion. So this gives them, for their $957 million equity stake and a company that is going to do a little under $1 billion of revenue, I feel that a $60 billion valuation is kind of high, but let's keep going. So if we compare this to some similar companies like Splunk, Palantir, Trade Desk, and CrowdStrike, Splunk and Palantir are more similar because their type of business model is doing pretty much the same thing as Datadog is doing. Trade Desk is into marketing and CrowdStrike is into cybersecurity. However, these are all fast-growing SaaS companies. So, and if you look at something like a CrowdStrike, we can see it has very similar revenue growth expected in 2022 as Datadog. And the forward PE is still very high on both of these companies. You can see that the market is just pricing these type of companies at extremely high forward PEs. And so I don't own any Datadog. The only company on here I do own, I've owned Trade Desk and Splunk in the past, but I've sold them. And now I only own Palantir. Palantir, the revenue growth is a little bit less, 29% for next year, but the valuation is dramatically lower. The forward PE is only 110 compared to Datadog's 385. A company like Splunk, you can see the forward PE is very high, but the price to sales is much lower. Splunk has a price to sales of 9 compared to Datadog's 66. So I love what Datadog is doing. I think they are a very fast growing company. And I think there's definitely a good chance that they become a dominant player in their space, but that doesn't mean that you should pay whatever valuation for it. And this stock, how I said earlier, is up 115% in the past year. So there hasn't been too many big dips in this company, in this stock this year. And so if you're interested in buying this stock, I wouldn't buy it until it dips down at least, 15 or 20%, because this valuation is just high pretty much any way you look at it. For a $60 billion company, they have to execute so many things perfectly over the next 5 to 7 years that there's really no room for the company to grow from here. So I think it's a great company. I just think the valuation is not attractive. And that is it all for today. There is Datadog.